This is Nashimar, the CEO of InfoTaxCard.com, and we are a team of CPAs and EAs. What is the approach to using the passive losses that have been suspended in the current year? This is my today's topic, in which we are going to learn if the passive losses which were incurred in the current year cannot be utilized, can those losses can be used in the future year. A passive activity loss. A passive activity loss, PAL, that is not allowed in the current year, in the current tax year, is carried forward and is considered a deduction in subsequent tax year. It has some characteristics which I am going to share with you. Number one, if the taxpayer's amount at risk increases in later year, the taxpayer may deduct previously suspended losses to the extent that the increases in the amount at risk exceed the taxpayer's losses in later years. Number two, passive activity losses continue to be treated as passive activity losses even if after the activity ceases to be passive in a subsequent tax year, except that it may also be deducted against income from that activity. Now I'm going to share with you a case study to explain how the current year losses may be deducted in the subsequent year. In 2023, Paige, a taxpayer, received $25,000 of ordinary loss beyond to her tax basis, which leaves her with a tax basis of zero. At the end of 2023, Paige will continue to carry forward $25,000 of ordinary loss beyond her tax basis until her partnership interest has positive tax basis. Paige in 2024 had income of $10,000. So Paige's tax basis will initially see an increase of $10,000. Paige has the option to use $10,000 of her $25,000 suspended loss towards her tax basis increase, which will result in Paige tax basis remaining at zero and the suspended loss remaining at $15,000. So out of $25,000 which she incurred in 25,000 losses, she can utilize her income of $10,000 against in 2024. In order to deduct the $10,000 loss on her tax return, now she has the $15,000 loss. In order to deduct the $10,000 loss on her tax return, she must first clear the at-risk passive activity loss and excess business loss limitation. Let me just summarize it. Paige had a $25,000 ordinary loss in 2023, and which she could not utilize it. And in subsequent, and she had to wait until she had the income. In 2024, she incurred income. So Paige is set to receive $10,000 in income from the partnership in 2024. Paige tax basis will initially see an increase of $10,000. Paige has the option to use $10,000 of her $25,000 suspending loss towards her tax basis increase, which will result in Paige tax basis remaining at zero and the suspending loss remaining at $15,000. In order to deduct the $10,000 loss on her tax return, she must first clear the at-risk passive activity loss and excess business loss limitations. I request you subscribe to my channel to receive the most up-to-date and accurate tax information in your email to enhance your knowledge. Thank you and God bless you.